Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. If you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. There you could also sign up for our free reports that get directly sent to your inbox. We have profiled a number of business development companies, BDCs for short, over the past few months. And that's for a good reason. Rising interest rates and high interest rate environments are good for alternative banks. Like today's pick, Saratoga Investment Corp, traded on New York Stock Exchange under symbol SAR. John?
Yeah, thanks, Mo. Rising interest rates are also good for BDCs that have a lot of floating rate loans. Now, on average, 80% of loans in a typical BDC profile are floating rate. This means they're well positioned to generate a lot of money in today's rate-sensitive market.
Saratoga Investment Corp does a little bit better than average BDC. 99% of the loans in the company's portfolio have floating interest rates. So, John, let's dig into what does Saratoga Investment Corp exactly do?
Saratoga Investment Corp, as we already said, it's a BDC, and it specializes in providing loans to middle market companies. It typically makes $60 million to $75 million investments in leverages and management buyouts, recapitalizations, debt refinancing, growth financing, acquisition financing, and transitional financing. Its typical investment has a revenue of $8 million to $250 million and EBITDA of $2 million or greater. It has to have strong margins and free cash flow, recurring revenue, and a stable historical performance, and modest capital expenditure and working capital requirements. Its portfolio companies also have to have leading market positions or niche with sustainable competitive advantages, strong management teams with meaningful stakes in the business, growth prospects in healthy end markets, and an ability to withstand business cycles. Its loan portfolio includes first lien, second lien, mezzanine, and unitranche. Its investment quality remains really strong. 96.5% of credits are the highest quality, and 85% of investments are first lien.
We've mentioned this before as well, but it's important we cover it again. The kind of loans that BDC has in its portfolio is actually very important.
Yeah, a BDC with a lot of senior debt stands first in line to get its money back. Mezzanine lenders get paid second. Meanwhile, preferred and equity lenders usually receive only a fraction of their original investment back in the event of a bankruptcy.
John, I was reading on incomeinvestors.com that this company just reported record earnings.
Yeah, for the first quarter of fiscal 2024, which ended May 31st, 2023, Saratoga announced that their assets under management increased 22% year over year to $1.08 billion. Now, as of May 31st, 2023, Saratoga Investments assets under management was $1.084 billion. Investment income or portfolio income grew 85% to $34.6 million. Net investment income was $16 million or $1.35 per share, while adjusted net investment income increased 100% to $12.8 million or a record $1.08 per share.
This company has been raising its quarterly dividends.
As a result of the company's strong earnings and continued stable credit performance, Saratoga Investment was able to increase its dividend for the second quarter to 71 cents per share. Now that's up 1 cent from 70 cents per share in the prior quarter, and up 17 cents from 54 cents per share in the second quarter of 2022. This works out to an annual dividend of $2.78 per share for a yield of 10.7%. Of note, this payout represents the 14th consecutive quarterly dividend increase. This needs a little explanation. When a company says it's raised its payout for 14 consecutive quarters, you think 14 quarters in a row. But that's not the case, and this is just to make things clear. Saratoga means it's raised its dividend 14 times on a quarter-over-quarter basis. So, for example, it paid a quarterly dividend of 53 cents per share 3 times in 2022. But those payouts were higher than what it paid out in the same prior year periods, and the corresponding payouts in 2023 have been higher than 53 cents. That's just as a little side note. The outlook for Saratoga remains solid, with Wall Street analysts providing a 12-month share price target of $28.92 to $30. Both targets would put Saratoga stock in record territory.
John, thank you so much for your analysis. Saratoga Investment Corp is a great BDC with growing and diversified portfolio. It has an attractive risk portfolio. 96.5% of credits are the highest quality. 85% of investments are in the first lien, and 99% of the loan in its portfolio have a floating interest rates. Because BDCs have to legally pay out 90% of their taxable income to investors, Dividends are a big draw here. From the second quarter of 2015 through the second quarter of 2023, Saratoga has increased its quarterly dividend payout by 373% from 18 cents to 71 cents. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.